Hello everyone, this is Teddy Kekstead from Forex Trading Unlocked, and we are here with a daily Forex market breakdown for you on January the 10th, 2020, and we're going to pull up our disclaimer real quick just to remind you that this webinar is for illustrative purposes only. Alright, our live screen here we have the Forex-Trading-Unlocked.com website, and we also have the workstation page already pulled up for you. So the numbers were some unemployment numbers and stuff that came out today. We still have some Asian and UK numbers that still have to come out, as well as Canadian. So we have the British pound, the Canadian dollar, and the Japanese yen that still have some numbers that will be coming out today. There are employment numbers and some other economic numbers, more medium weight than the unemployment numbers that came out for the US. So we have the dollar index, which has been railing since the beginning of the year and has made higher move highs once again yesterday. However, today the market has run out of steam and has turned around. You got to look at this the major trend here for the dollar index, as you can see, is lower, and unless we take out this last lower move high at 97.82, I don't think that we're going to maintain this rally. Right now the overall posture is bearish. I think that the current rally that we have going is a corrective move, and we may be seeing the beginning of the turn today or going into the early part of next week. So let's pull up the Euro US dollar real quick and start with that. So in the European trading zone, we had a nice little bit of action this week, and we had this sell signal that had been triggered on the first trading day of the year last week, and now we are a full trading week later, and we have started to set looks like a potential bottom here. Now, as you can see back here in December, we had set this higher move low, then we set this higher move high that ended and peaked on the 31st of December. Since then, the Euro US dollar has been correct as the dollar index has been correcting, and the whole biggest question we have to ask ourselves is, like I said, is the posture going to remain the same? So the overall trend for the dollar is down, and if it is going to continue, then likely this correction that it's been in is going to start to run out of gas. Okay, so let's pull this chart out a little bit. So we can see the major pivots. We have a $1.1239 up here at this last higher move high. This is our breakout point to the upside. So if you're an aggressive bull, definitely right now you should be looking as this is a good buying opportunity, because right now the market's trading at, what is it, at 111.11. Now we have this last higher move low, which is down at $10.64. So still a little bit of room here for the market if it was to fall back onto support. For the market still to give you a little bit more of a buying opportunity, but we may have seen the bottom today, because we had the employment number today, and usually now that we've digested it, it's 2 hours later since the number came out. The markets are open. The markets are right now, we got gold higher, silver higher, copper higher, Dow's up 16. So yeah, right now everything is kind of in a favorable place, and we're going to wind down the trading week. Remember that the Asian and European markets are now pretty much done for the week, and we have just the US markets open. So unless we have any real radical change with those numbers that are coming out, or some kind of unexpected stuff, I think that right now you're pretty much looking at the end result of the trade for the day. Maybe get a little bit higher move highs for the Euro US dollar, but I wouldn't be pressing this too much. I would key off of the low from today. Obviously, if the market turns back down on that, then we would be unfavorable. But I think right now, if you're a long-term trader, you want to look at this as a good buying opportunity, and we're going to probably have a good shot at making a run for this high at $1.1239. Now here we have this black line here. This is the Brexit vote, and this is going to tie us now into the British pound, which we're going to move on to. So the Brexit deadline is on the 31st, so it's very likely that we could be bottoming right now and then start to set a rally up towards this $1.1239 area, and we may even just go sideways to higher over the next couple of weeks as we head into Brexit. So let's look at the pound US dollar and get a gauge on what's going on there. So now the pound, as we know, moving into the different Brexit deadlines so far, the market has typically dried up into a sideways trade. So here we had this last higher move high. We have this breakout point of $1.3517. Only above that do we really start to get really bullish. Then we have this last higher move low down here in this circle where we have $1.2895. Now this is in between these two caramel dash lines here. See how the market had traded sideways, and then we had the election. Boom, we had the move in the pound. Now we know that on January 31st, especially after the way the elections went this week, that the votes went with Parliament, that Boris Johnson has gotten his approval for getting the first stage of Brexit done on January the 31st. So our pivots are this last lower move high and our last higher move low. Now the question is, this market is in an overall bull market, but it could be in a sideways basing to higher stance. The odds of it going sideways right now are very, very high. And I think if you look at the pivots right now, you're just raising the range where these purple pivot points are, the $32.92 extreme and the $28.95, basically a $3 range. That's just a little bit wider and a little bit higher than when we had the sideways trade back here at the end of from October going into December before we had the breakout to the upside. The reason being, since we have to declare the Brexit time, I think you're most likely going to see this stay this way and go neutral. And here's what I want you to look at. Let's look at the British pound versus the Swiss franc. Okay, so the British pound, oops, we got the wrong, gotta do GBPCHF, there we go. Sorry about that, put in the wrong symbol, there's no such symbol as that. Okay, see how sideways this is going? The Swiss franc has been trending versus the dollar and moving against other currencies in a big way. This is going sideways. That means most likely, since the pound and the Swiss are very neutral right now, going sideways into Brexit, then I think that the pound is going to stay very stable versus most currencies. Now let's look at the US dollar Swiss, since we're talking about the Swiss franc. So the Swiss franc there, oh wow, look at this. This doesn't look at all like the other chart, does it? See, the US dollar is a totally different story, and the pound, for some reason, with the Swiss and the dollar, it looks very, very similar, even tighter with the Swiss. So that's locking the pound down, I think, going into Brexit. But look at this. We have the Swiss going into Brexit. Are they going to go sideways? I think they're in a neutral to higher posture because they're basically following the dollar index. So if the dollar index is in rally mode, and then we're going to see this US dollar Swiss probably start to rally up towards this 98.32 area, but we're heading towards Brexit. The Swiss don't care about Brexit, but see, with the pound they do, which also shows that they're pretty neutral on it. There's not much expectations of volatility there, as far as that's the one relationship in Europe that's going well. We can look at the British pound versus the euro, which will show you some volatility. Look at this. See, now this one looks just like the pound versus the US dollar. Very similar charts. So the euro and the dollar seem to be on the same pattern with the pound versus how the Swiss is. So let's go back to the US dollar Swiss and get a gauge on that. So if the US dollar starts to fall against the pound on that chart, that would most likely bring the US dollar down against the Swiss. So this area that we're in here, we have this upward sloping blue line here, which is just the beginning of a short-term trend. Remember that this is an overall bearish market right now. It has been for a couple months. And so this is only an upside correction that we're looking at currently. And if the dollar index is part of the driving force behind this, then we're obviously going to most likely see the US dollar Swiss start to hammer support once again. Now let's go across the sea to the US dollar Japanese yen trade and see what's going on here. Okay, like a balloon underwater, we set a nice new low a couple sessions back, and we're right underneath this heavy resistance here near these highs, trying to make higher move highs. And look at today, we almost did. We almost poked through and made new highs. Pretty crazy. So now the US dollar index has been rallying, obviously giving this market a nice little boost. And the funny thing is that the US dollar index, while it has been rallying over the past few sessions, it's not as high as it was months ago when it was trading up over when the US dollar yen was over here. And this gets back to our thing that we've been talking about for months, that no matter what, the dollar index is probably going to be bearish over the next few months. That doesn't mean the US dollar is going to be bearish against the Japanese yen. Now we had the January 15th trade deadline right here, so it's very possible that the trade is going to tighten up, like for a day like today with economic numbers that were significant in the U.S., obviously meaning the employment numbers, that would leave this trend to start to run out of gas, the momentum from today's trade, because look at where we came off of the past couple sessions. So it's probably exhausted, and you're probably seeing a lot of profit taking and selling going on against the U.S. dollar yen, especially since the U.S. dollar is under pressure today versus most of the currencies. So the dollar index is under pressure, so that is slowing this rally, but still this is where the US dollar is positive. Once again, let's look at the euro US dollar, just so you can kind of get a bearing and understanding on what we're talking about here. The euro, look at this, it's pressing higher move highs as we talk. Just like I said, I think the market's pretty quiet for the day. Who knows, maybe we're going to see one of those creeping rallies today, because the markets are thin, most of the world is closed, and now here the economic numbers are done for the day. It's a free trade, and we're just going to start to see stops erode and profit taking, and maybe the beginning of, let's see, a higher move low. Could it be? I don't know. We'll see. Let's go to the Australian dollar, US dollar, to show you this. The Australian dollar, US dollar, look at this. Boom, like a balloon underwater. Okay, so see how this had made the higher move high? We had our sell signal. We actually came into our zone. We hit all our targets with our sell signals from buy signals from last week with these high probable Japanese candlestick patterns. They were wonderful, and they were all for corrective moves, which we were looking at. Are they a change in trend? We never want to try and pick a top or a bottom, but we were looking for a potential corrective moves. We got them. They hit our targets, and here we go, setting us up for a higher move high or higher move low. So let's go back to fundamental theory. Back here, the market made higher move highs, then it made a higher move low, then it made this higher move high, which we fell off. But look at this, higher move low was established over the past couple days, and now the market's trading very, very much higher and looking like upside momentum is starting to build again. The overall trend is up, meaning dollar index weakness. But we go back to the US dollar yen, see how these pieces all come together, folks? This one's actually slowing down. It's for, and who knows what it is. This is how this works. See, the Japanese yen had been gaining with again, or had been losing against the dollar. Now all of a sudden, the one day that the dollar is starting to gain or lose momentum versus all of the major currency crosses, then here we go, US dollar yen. It's the dollar is strong. So the dollar has, for some reason, some innate strength right now going on with the Japanese yen. We'll see what happens after this January 15th trade deadline of next week, where phase one of the trade deal is changed. So we looked at the Australian dollar already. We see that that one's a big bull. Let's look at the New Zealand dollar, US dollar, because here's another market that we had our sell signal, we came into our target range, and here, look at this bull, which has been very, very strong against the dollar no matter what over the past couple months. Look at this. It looks like it's trying to set another bottom. Will it? Well, we're going to see what happens over the next couple sessions. I think right now what we are seeing is the beginning of a new bottom and a trend, a run for higher move highs with the New Zealand dollar, US dollar. Remember, we have the dollar index in an overall bear market. We looked at that at the beginning of the video. So if these moves, we hit all our sell signals, like here, we had this top here. The next day, we had a bearish engulfing line. We came down into our target range, just like the other trades. We were very fortunate with these from last week. And those all were corrective moves. Now, if they all are fundamentally corrective moves and they hit their target zones, well, once they hit their target zones, they should be exhausted, right? And here we have, like in the last chart with the Australian dollar, here we have a higher move high, higher move low, higher move high, and now we're starting to set a higher move low. And now we're heading into that trade thing, which no matter what, the dollar has been a bull against the dollar. So if the dollar index truly is starting to turn back towards support and become a bear, that should help to fuel this New Zealand dollar, US dollar currency cross trade. Now we're going to go to the US dollar Canada. and see how this slope has been breaking like very, very extreme for the past couple months. We've had a nice little bottom here, but this was a lower move low, folks. And right now, unless we get above this $31.81 area up here, this upside target area extreme, we're not making higher move highs. So until then, right now, this is looking as a corrective move. And look at today, the dollar is also falling against the Canada. Is it going to run out of gas and start to turn back towards support? Well, this overall trend is extremely bearish, folks, and if the dollar index does start to take a big turn towards support, I think you're going to see the same thing happen with the US dollar Canada. Now remember, if we look back, see how this is? We were in a neutral to lower stance here, now going back towards the summertime. This is not remotely looking for a bounce right now. We don't want to ever try and pick a bottom. So as we had this bottoming over here and this current correction here, this should be a corrective move lower, with the extreme being up by this upside target area. But remember, if the dollar index is under pressure, we have really good odds of this market continuing back to Badger support, which means this $29.57 area could be a target of interest in the not too distant future. So right now, I'd be very careful being a bull with this. If you're already long, keep your stops tight. If you're in the cash or the futures markets, if you're playing some options, well then I guess you got some good opportunities to maybe, if you got some low risk out of the money calls or something like that, to try and shoot for these higher levels. But right now, like I said, especially if the dollar index comes under play again and starts to trade lower, this market most likely is going to be setting a lower move high here and then go back towards setting a lower move low in the not too distant future. So we have the opportunities of a lot of trades right now. The Canada is a little bit rough. Let's go backwards. Let's look at the Australian dollar, US dollar once again. So we saw that the Canada is giving us some indications that go along, coincide with these trades. Here we have, it looks like a bottoming. Now up here we had this bearish engulfing sell signal that gave us an indication of what to do. Right now it just appears to be bottoming, and fundamentals and technicals are lining up to kind of engage this trade and make it happen. But we don't have anything to really confirm this. So we're going to have to see how the close is today to really know what's going on with this. But it looks like we are finding that we found some good support, and the old trend is going to start to go in our favor back towards the upside with the Australian dollar, US dollar. So it looks like we may have seen a nice opportunity to get in as a bull. The New Zealand dollar, US dollar, doesn't look to seem to have quite the volatility as the Australian dollar. But remember, the trade deal next week impacts Australia more than it does New Zealand. And the New Zealand dollar has been a very big bull already against the dollar, so it doesn't need to start to be a rager. But look what it's doing right here. The market's been trending lower today. If it settles where it's at right now, that sets us up for a potential buy signal next week. And it is a short-term buy signal already, but it's a weak one, but it will be one. And if it takes out the close or the opening of yesterday's trading session and settles above that, well, then we have a very big confirmed buy signal in the New Zealand dollar, US dollar. So we have some good things to look for over there. The US dollar, Japanese yen, we're not going to go back to that one because we already know that that's a little bit in flux, and it's kind of hard read, just like the Canada is. But we have a signal with the pound. We know neutrality is where we're going right now. This is heading into Brexit. It's going to be a really tough trade, so probably for your range traders, that's where you want to look at. The euro US dollar, this is another situation because of the Brexit that we're probably going to see a range trade develop between these two big pivots of $1.1064 and $1.1239. So short term, are we bullish? Yes, it looks like it's trying to make a short term higher move low, which then gives us a chance to start to rally into the end of the month. But I bet you it's going to be a grind as it tries to make a run for this $12.39, and it could take us literally the next like 2 weeks to get there, just kind of inching higher, like having a range like it did today. I mean, think about it. It's Unemployment Friday. We have a range in the euro US dollar of, let's see, $1.1085 up to $1. You got just over, you got 32 pip range. For Unemployment Friday, that's nothing. But then remember, we have Brexit, so the euro US dollar and the pound US dollar, be careful with those over the next couple of weeks, folks, because of Brexit. It might start to dry up and might become a range trader's delight and a swing trader's nightmare. But we do have the Australian dollar and New Zealand dollar. It seemed to be giving us some ideas for some trades for next week. So we'll see what happens with that. And if you want to learn how to trade these Japanese candlestick patterns, you can go to our website, www.forex-trading-unlocked.com. At the bottom of every page, we have a little thing here where you can click on for the high probable Japanese candlestick patterns and get a dose of the book and start to see what it's like and see if you want to buy it. And then you can get it on Kindle or a paperback version on Amazon.com. So we will see you soon. We are going to end this webinar for the trading week. I'm Teddy Keckstedt from Forex Trading Unlocked. Please like, follow, and share us everywhere on social media that you can. And definitely on YouTube, become a subscriber so you can see these videos when we stream them live or when we upload our other content. You'll get notified right away when that happens.